What is the real reason for price fluctuation in the stock market? What causes price to go up? And what causes price to go down? That's what we're going to be discussing over the next few minutes. Well, many people would probably say it's the news, right? You watch all these news stations and they say, well, this report was just released, and that's what's causing prices to go significantly higher or significantly lower. Is that the real reason, or is the news just a catalyst to move price? Well, let's talk about it a little bit further. The stock market is just like any other market in the world. Anything that is for sale, it falls into the same category. What drives prices? Well, let's talk about Economics 101, supply and demand. That's simply it. It's the same thing in the stock market as it is when you go to the meat counter and you buy steaks at your local grocery store. It's the exact same thing. How much supply is in the market dictates price. Also, how much demand is in the market will dictate price. So, what about news then, right? You might be thinking, well, what about news then? I swear I see stock prices move a lot when news is released. Yep, you absolutely do. However, the difference with news is that news is a catalyst. News moves price to where it was going to go anyway, based on supply and demand. Now, probably lately, you've been seeing a ton of stocks and the market continue to move higher and higher, almost on a daily basis by 1% or more. It's just crazy lately, right? And you think, really? That's what's doing it, is supply and demand? Yeah, it's a function of a couple things. It's either a massive amount of demand, which it's probably not all that much demand realistically, but rather it's the lack of supply. The lack of supply, which is allowing prices to continue higher. Because if nobody's willing to sell, right, otherwise known as supply, sellers are supply. If there's no supply coming into the market, what happens then? The sellers say, well, I don't really want to sell, but at this certain price, I'll sell. So they continue to back up their price higher and higher. And meanwhile, the people who are anxious to buy continue to buy and say, I just need to get in. I'm missing out. So I need to jump in now and take advantage of these price appreciation in all of these stocks. So I'm willing to pay a little bit of a higher price. Meanwhile, the sellers are saying, okay, well, I'm willing to sell a little bit higher too, right? Who isn't willing to sell a little bit higher? That's how it works in the market. It's the exact same thing with supply and demand at your local grocery store, with your favorite cereal, with plastic cups, with gas at the gas station, anything. You name it, if it's for sale and there is supply and demand dictating that price. Now, let's talk about the downside. It's the exact same thing. One thing that many people forget when they look at the market and then when they're trading in the market or investing in the market is every person that buys is by default a seller. Guess what? All of those people need to sell someday. So the higher the market goes and the more people that jump in buying, guess what? That is all the more sellers that we have coming into the market someday. Well, you know the saying, what goes up must come down. The higher it goes, the harder it's going to crash. Mark my word on this. Who knows when it's going to happen? We don't know exactly when, but it will happen, and people are going to pay dearly for it, like they did back in 2000 and 2008. A lot of people are going to get hurt because all of these people will need to exit their position at some time. However, let's talk about supply and demand for a second on the downside. What happens now? So let's say we're at the market highs, the all-time highs, like we're pretty much sitting at right now, all-time highs. We have all these buyers that bought in, all the demand driving prices higher. Well, guess what? Everybody is now a seller, otherwise known as supply. They start dumping this supply onto the market. The market starts going down. The indices, the S&P, the Dow, the NASDAQ, the Russell, all of these start going down. Stocks continue to follow along. And the buyers start to say, well, as long as this thing's coming down, I'm not willing to buy at 50, but rather I'm willing to buy at 45, or I'm willing to buy at 40, things like this. So the buyers start stepping back also. Meanwhile, all of these people who are willing to sell are starting to get a little bit anxious and saying, well, I'm just ready to sell. I just need to get out of this thing. It's going down. I just need to sell. Well, meanwhile, the buyers continue to step back and say, well, I don't mind getting a better deal. I'll buy even lower. I'll continue to buy lower and lower. They keep backing off their price. Meanwhile, those sellers, otherwise known as supply, needs to keep lowering their price at which they are willing to sell in order to find a buyer to take those shares off of their hands. And get what I'm saying? Same thing. So it's all about supply and demand. It's either a massive amount of supply and a lack of demand, or it's a massive amount of demand and a lack of supply driving prices all around. And news is the catalyst to move price from one pocket of supply to the other pocket of demand, basically just oscillating back and forth. If you've ever watched the market trade in real time, it's like, what would you even describe it? I mean, it's like watching an EKG, right? It's 1 second it's going way up, and then the second later it's going straight down, right? It trades very erratically like that. But it's all because of supply and demand. Hope that helps you out. Thanks so much, everybody. Enjoy your day. Make sure to hit that subscribe button, and I'll catch you again in the next video. Thanks.